We're going to be comparing an opportunity for potentially a sub-2 taking on someone's rate potentially in the threes or the fours. Run through those numbers, look at a property in Pompano, and I'm going to share my screen. This is an Inlet Beach. This is just an example listing, and we're going to run through an exercise. So this is the public beach, public regional access. So this area, this is a one property that I know that's on the market. It was purchased in 2021, probably has a pretty good interest rate. So we're going to go through an exercise and look at some numbers. And so we'll get back to this in just a second. So this is the property. So this is the beach access that you have the ability to get to. And this property, if you zoom in here, is right there. So direct, very, very close walk to the regional Inlet Beach, one of the areas on 30A. So you can see some of the pictures. Nice home. It's a 4-bed, 4-bath, 3,000 square feet, listed at 2.49. Listed by Morgan Palmer, Berkshire Beach Properties. And we've got a 20% down scenario with some points to get down to 6.875 and total payment 16,000 and change. Okay, so how does a sub-2 factor into this? So the sub-2 means you're basically going to be taking over the existing loan via transfer of deed, and there's addendums and parts of the contract that protect both the buyer and seller. Those are all pieces of the puzzle. I'm not an expert on this, but there's some people that I know. One of the people that a close friend of mine, Chris Iannotti, Apex Group up in Nashville, Tennessee, does a lot of this stuff with buyers across the country in terms of the paperwork and all that. So what I've got here is I've got a purchase price at 2.5. Let's just say you can get to 6.75%. Now, one of the questions that we always ask our buyers on the lending side is, hey, do you need to have the rental income to qualify or not? And if you don't, that tends to have better options for lending products. So this is a jumbo loan product that would be at 6.75. Now, in this example from a few weeks back, again, not a quote, just an example from the previous scenario, 2 discount points got the rate down to 6.75 and estimating taxes and insurance in here. So a payment of 15,745. Now, if you were going to take on someone else's mortgage, make payments, let's say that they had an interest rate of 4.5. I don't know what it is. And the balance is 2 million. So again, this is just comparison purposes. I don't know exactly any of the details, but just hypothetically speaking. So 2.5 million, bring the same down payment, a rate of 4.5%. The payment's going to be 12,907, all things being equal. So it's a reduction of 2,800 roughly of a lower payment. So other part of the puzzle, okay, well, what about rents? What if you do end up renting it out? Well, I ran an AirDNA scenario, and the rents ended up being projected in the 140,000 range. So I can find it. Just had it up. There we go. 126,000 in that area. So you're thinking 10 grand a month of rents on a payment between, 13,000. If you're looking for a property just as a pure rental, it's on a cash flow, maybe not the best scenario, but the people that are buying these properties at these prices typically are not looking to purchase these as just straight up rentals to be able to cash flow and needing that rental income. So if you have questions on condo tells, that's what this channel is all about, condo tells, getting approved, education, comparing numbers, what's the right way to look at these types of scenarios, some of the risks that come into play too in terms of insurance as well. It's a big hot button in Florida. My insurance has drastically gone up in the last couple of years. So the purpose of this channel is to educate, to show some of the ins and outs. And then let's say that a buyer wanted to come in and, hey, I don't want to do either of these. What if they said, hey, you know what, I'm going to come in, I'm going to put in an aggressive offer at 2.4 and go get their own financing and not do a sub-2, then your payment's going to be $1,522. So about $500 lower, roughly. And then you're going to be bringing a little bit less money to the table as well. So in these situations, I think you're going to see a lot more creative deal structure subject to coming into play with people that purchased in 2021 that maybe want to exit, get some cash out, but those rates being so low, maybe even double today where they were in that time frame, depending on the situation. People being creative to be able to create a structure that makes both sides walk away from the table in a good spot. So if you have any questions, you can reach us on my cell phone, on the bat line, or you can email. All right, until the next one.